Good morning all and welcome to your London analysis on Monday the 28th of October. So let's just have a look at where we are at the moment in terms of the market sentiment. So we're very much in neutral territory across the board. So to run you through what's been going on, the US dollar we saw, PMI, manufacturing PMI estimations surpass expectations. So we saw a bit of a boost, but that's now kind of slowed down, and I'd say, if anything, the dollar's just trading fairly stable. In terms of the pound, we've got the mixed Brexit outlook. Excuse me. I've got the mixed Brexit outlook, so lots going on there. So Boris Johnson was taken to sort of court for supposedly doing a whole parliamentary pause in a non-lawful way. In terms of Brexit itself, it's looking like we're going to get another extension. It's the usual stuff. Over in the Aussie, we've got holiday fin conditions. Same with in New Zealand. So with the Antipodeans, it's looking like across both the New Zealand and the Aussie, it's looking like rates are going to be on hold now for a little while. So we're going to be in fairly neutral fundamental territory if that's the case. Euro, we saw support from German IFO readings on Friday. So there was a bit of a boost there, but that soon slowed down. The underlying fundamentals are still weak. And of course, we have got the sort of the Brexit uncertainty, which, ultimately will affect the euro. Japanese yen pretty much moving in line with safe haven flows. The thing to be aware of there, if people flow into the yen, they're soon going to flow out when there's something going on elsewhere. So safe haven flows are very fickle. So trading wise, for day trading, it's not the best thing in the world to do. And in terms of the CAD and the Swiss franc, we're just waiting for some fresh data. It's been a little bit quiet on that front for a few days. So that's pretty much where we are now. So very much neutral territory across the board. In terms of news or things that we've got coming through, we've got a Parliament Brexit vote, which is fairly tentative. That's just going to be going on all week, obviously. So I'm not particularly going to be focusing on the pound at all at the moment. We've got the dollar consumer confidence on Tuesday, as well as a speech from the RBA. Wednesday could be an interesting one though. We do have the CPI readings coming through from Australia, so that'll be quite interesting. The German CPI could again be interesting, so the euro is going to be quite sensitive to that. Then of course we've got the ADP change, which is going to give us a bit of an indication of what kind of NFP to expect. And we've got GDP. We've finally got some stuff coming through from Canada. We've got the monetary policy report and press conference. And of course, we've got the FOMC as well for the US. Thursday, we've got business confidence for New Zealand, building approvals for Aussie. So, not the sort of the key focus for me in terms of news, but again, we might get some movement from that. We've got the Bank of Japan outlook report. Now, we do expect them to signal that there's not going to be any more intervention, but that's just, what we're kind of expecting based on news. So we'll see what happens on the day. Later on that day, we've got the GDP for the CAD. Then on Friday, of course, it's NFP day. So this week, we've got lots and lots of data coming through. So hopefully, as the week progresses, we should start to see some movement. In terms of today, we've literally just got that one potential pound thing flagged up on Forex Factory. So it's very, very doubtful anything is going to happen today. So if I was you, I would deem today a complete day off, and then we'll come back tomorrow and see what went on from the Governor Lowe speech from Australia. So that's pretty much it. That's hopefully you fully prepped up for the week ahead. Last week rather was a very quiet week. This week I expect a quiet start to the week with things to perhaps start picking up from Wednesday. So that's it from me for today, and I will be back tomorrow morning to see where we are with the markets. Cheers.